This was Meta's cup and handle. I mean, obviously it didn't come all the way back up, but it's so close that this was the cup and handle. Yep. So here's your cup. There's your handle. Now typically it'll come back up for a retest and then it should break through. If not, you're going to get a massive pullback. It's now you've got your level is here and here. Do you see it? It
Yes,
doesn't.
sir.
That's it. That's it. That's all. Right there, what I just drew out for you, this is a $1 million trade. Yep, absolutely. And look at what it did. SPY did the cup and handle, come back up. This is the retest. See it? So if you look, same thing again here. Cup, right? Handle. Now we're in this range, waiting for this break of 450, 422-ish. We don't trade on the top. Never trade on the top. You guys want to know why we don't trade on the tops of these? We don't trade up here. We don't trade up here. Do you know why?
I want to know why.
You're
These
more
will be a
like,
violent downside.
Long way down.
Because the people that got in at the top want to get out.
correct. And you have more likely a chance for it to come back to where it once was than an unknown area, right? So people feel secure because they've seen this recently, which was here. This means, hey, if it touches, I'm getting out. And it did. So now it's here to sell. Here it's coming back down. Here to sell. Here it's coming back down over and over and over till that pattern breaks. And you're going to see SPY, right? Ripping down, breaking through. So this is why if you enter a put on the top, it's glorious. You can leave it alone because even if SPY comes back up to retest, most likely it still wants to go back down. Which means you are at better odds on a double top to buy a put than a call and keep a tight stop if the market does decide to go and then flip the script and then put a tight stop below it, right?
Right. And plus the candle's likely to be a big long one, which
Correct.
is
So that is true too, right? So your puts will typically make you more money because they're faster accelerating than your calls are. And we discussed that last week or the week before because they start to trigger stop losses, right? And once those start triggering, sell off, sell off, sell off, sell off, giant red bloody candles like you see here, which are amazing for your puts, right? Look how long those candles are. And that's why you get paid so much on puts. I mean, honestly, if the market makers told me you have two choices. You can only ever buy calls or puts from now on. So if I'm buying a put here, you see how these are coming? So my stop, obviously mentally will be like right here, right?
Sure.
Because again, I have a greater chance to the downside than who cares about this. Now look at look at the risk to reward. This
Right.
is my risk. This minimum is my reward. See the difference?
Makes sense.
Yep. And if SPY breaks below VWAP, guess what? Now it's coming all the way down to around this 453.36. And then if it breaks and can't hold, it's coming all the way back down to 452.83. So that means my risk to reward is absolutely insane if you think about this, right? So now my risk was here to here. That's my risk. And my end up reward is from here to here. See the difference?
Does that big down candle hold any significant weight on it? Like if
Yeah.
it touches and it hits real quick and bounces back?
Yes, because that means all the sellers are sitting at 450, 422, which confirmed that move for me. Yep. Absolutely. And then everybody got on that bandwagon, pulled it all the way down, came all the way back up, pulling all the way back down again. Look at this. See how this just keeps bleeding out?